I have a sizable term life insurance, right? Because again, Money Magazine, Kiplinger's certified financial planners, they will often say buy term and invest the difference, right? That's the mantra that kind of comes from that community, and that's fine. Term insurance is great. It's absolutely better than nothing, and you absolutely can couple it with cash value life insurance, right? There is a strategy to add the two together, enable you to effectively put more money into your cash value, into your own warehouse of storage for your cash.
Welcome to Spur Equity's Spur Your Wealth podcast, your ultimate guide to passive income through real estate investing. Join us as we together discover the secrets of building wealth one passive investment at a time.
From expert insights to inspiring success stories, this podcast will inspire you and empower you to take control of your family's financial future so you can live life on your own terms.
All right, everyone. Welcome to another episode of Spur Equity's Spur Your Wealth podcast. We are your hosts today, Budham Singh and Rav Singh from Spur Equity. Now, as you all know, on our Spur Your Wealth podcast, we aim to bring successful investors and experts and thought leaders on our podcast to share their story and secrets in investing so we can all stand to benefit from their experience. So on today's episode, we have Brandon Beaudoin. So Brandon is a budding entrepreneur with businesses in short-term rental space. He is an owner of over 5 units. He's operator, self-managing his STRs, but he's also an active real estate investor with 4 different operators consisting of over 1,000 doors in different states all around the country. But most notably, Brandon is the infinite banking guy. So he's been teaching and coaching folks around the infinite banking concept. He's a practitioner and coach in the concept of infinite banking. So we are super excited to have him here today so we can learn all about that today on our podcast. So welcome, Brandon. Thank you for being on the Spur Your Wealth podcast. Really looking forward to the conversation.
Thank you guys both for having me. Happy to be here and share what I know.
Excellent. Great. So, we get a lot of, we get a lot of investors, we get a lot of different, folks working in different aspects of real estate. And you're obviously familiar with real estate investing. You're investing yourself, but, talk to us a little bit about, your journey, how you got into that real estate, and then also just give us, and we'll go into much more detail about the infinite banking concept, but just give us an intro to what that means, right, at a basic level. And we'll kind of dive in deep and how, folks that are in the same boat, how they can benefit from that.
Yeah, sounds good. So a little bit about me. I'm not certainly not what I would proclaim to be an expert in anything, right? I think we're always learning. And for me, that kind of started at an early age. I grew up in a small town in northern Michigan, single parent family, a couple of siblings, and not a lot of money to go around. And, out of that kind of environment, kind of spurred the drive and motivation to break free from that, right? Free from that kind of the mold, because where I was at in northern Michigan, it was more uncommon for healthy, 2-parent families to exist. They were there, but there are sprinkles of them within the neighborhood. So I was always, observant from an early age on things that I should do, and kind of aware of, things that I shouldn't do. But I did more of the things I shouldn't do, and that kind of led me. It led me to, a bumpy adolescence a little bit. But I did well. I did well in high school and was going to go to college right after high school. And I ended up joining the Navy instead. So I bounced around the world for a little bit. At the time, didn't have any real estate to my name. I was doing a lot of deploying, up through the first, 8 or or 10, 8 or 10 years of my career, off and on. So, it was also kind of, I had joined in 2000, and, 2006 came up pretty quick. I'd done a couple deployments, and then workups up until that point. So purchasing real estate for me really wasn't in the cards, although I was aware of it. So my entire life, I thought I was going to be at one point a lawyer, and then at one point a financial planner, because again, the way I was brought up, the environment that I was in, I had this mindset that, I did not want to be without money, did not want to be without wealth. And I certainly didn't want my family to have to kind of go through those same things, that I did growing up. Not all bad, right? But, money certainly, it's a necessity. And I treated it, I think appropriately, in that, I was a student of it. And, so I knew at some point I was going to buy real estate. I knew that was a key asset that a lot of wealthy people had in their portfolio, right? And so that's kind of how I got my first property in 2010. I bought 2012. So it was 12 years after I joined the Navy. Got a small townhouse in Maryland, and immediately started house hacking it because I was a relatively young sailor, single, no kids, but I bought a 3-bedroom, 2-bath townhouse in a really nice neighborhood there in Maryland. Mm-hmm. And so I think I was house hacking before it was a popular strategy, mainly because, again, like I didn't want to pay the mortgage by myself. I had empty rooms, and I was in a really good rental environment. I knew the environment. I studied it before I purchased, because I was looking resale. I was looking down the road, so I wanted good schools. I wanted, good rent rates, stuff like that. So, so I started house hacking kind of early on, and then ended up not even being in that townhouse all that long, and started renting out full time. So that was, kind of my entry into the real estate, field, I'll say. And then, we started adding to our portfolio. I met my wife. We, in the military, we started dating, and did that, long distance for a while, but then ended up getting married and both separated. So we built a house in Northern Virginia, lived there for 6 months before life happened. We had some stuff going on her side of the family that forced to move out west. So brand new, beautiful, 4-bedroom, 3-bath home in Loudoun County, Virginia. Again, great market. And I wasn't about to sell it after, living in it for 6 months. So we just rented it out, and we kind of repeated that process, 0 down, VA loans. It was a great tool for us, low interest rate environment. So we did that for a while, and that's kind of how we got into the long-term rental space. Did that for a while, self-managed, and then, did that for a little bit. And then once we settled in California for a little while, had a house built there. We bounced around on a couple of homes there. Had a house built in Escondido in one of the earlier phases of a master plan community. And we thought about renting that out. We had a COVID hit in 2020. We had our third child. We had a beautiful baby girl earlier in the year, and then COVID hit. So everything shut down in California. My scope of work had changed. And that's what kind of brought us here to Texas. So at that point, we had stumbled on Bigger Pockets, and Avery Carl had an episode on Bigger Pockets podcast that I had listened to. I was in those forums a lot, listened to podcasts quite a bit, and I heard hers about short-term rentals, and I was like peripherally aware of short-term rentals, but didn't really think about it. But once I put a little more thought into first of all, the cash flow potential, the fact that, we could visit and spend time in the properties. We really like that aspect of it, in addition to the increased cash flows. This is before we knew anything about, bonus depreciation and cost segregation studies. So, or even 1031 exchanges at that point. So, but we knew we wanted to get into the vacation rental space. So that's kind of when we started transitioning out of long-term rentals into the short-term rental space. Did that for a few years, a couple different markets, scaled it up, and then go ahead. Sorry.
Yeah, no, I was just about to say, man, this is your journey is amazing, right? Because you've gone from East Coast to West Coast. Now in Texas, you had 13-year experience with the military, especially with the U.S. Navy. So I mean, there's a lot to unpack here. I would just love to sort of get a little bit deeper into some of the aspects, especially your experience with U.S. Navy. I know we have a lot of our friends and a lot of our even investors who are in the armed forces. We live in a city which is a military city, USA. I mean, being in San Antonio, so we know a lot of people that are basically in this service oriented field. So tell us a little bit about that. I mean, in terms of your experience itself, I mean, what influenced you when you were getting out from your career in the Navy to looking into real estate? I know you sort of stumbled into the house hacking, bought that townhome, and you lived in it. You probably had some people in it. I mean, unpack that for us a little bit. As you were serving in the Army itself, did you ever think about real estate, or did you know any other mentors or anybody else who had ever sort of thought about that real estate field itself? Give us some sort of life, your sort of pivot moments, when you were serving in the U.S. Navy. How did those experiences help you shape to what you are today?
Yeah, I think, interesting enough, early on in my career, I met a guy that he would cut my hair on a ship. And, when you're underway on a ship, there's some tips and tricks with regards to getting good haircuts. And usually it's not going to the people that are supposed to be giving haircuts because, they're not necessarily there by choice, and there's not a lot of pride in work, I'll say. So you may not get what you wanted, but so I found a guy, and he was a senior enlisted gentleman, been in the Navy probably 16 years. Did a great job cutting hair, but every time he was cutting my hair, he was talking about real estate and day trading, and that was kind of like I always real estate again, going back to me running, reading Kiplinger's and Money Magazine and some other books back in the day. I knew it was an asset class to get into. It was just a matter of time. But he was, based on what I knew, really successful. He was just, going along on the tail end of his career, about ready to collect his retirement and punch out. But he was a successful day trader, told me some of the ins and outs of that.
Right.
And his real estate portfolio. He had a whole bunch of rentals. So that was kind of like where the seed kind of got planted,
Sure.
aside from reading it in magazines. But I never ended up taking action on the day trading. I did some, for fun stuff online, right, with some of the fake money digital stuff, just to see how your trades would play out, just to see, how good or bad I would do. But the long and short of it, it's funny. Life it did not take me down that path. Now I know several people that do it, and they do it quite successfully. And it's intriguing, but for me, it's kind of always been real estate. I like tangible things.
Yeah.
The short-term rentals, especially, if you understand that, you can manage from afar. Okay. We self-manage all our rentals. Digital technology allows us to do that fairly easily. And you're not scared of a little bit of hard work, and getting out there and doing things on your own, which I enjoy the aspect of it, right? I can mix business with pleasure by going out there with my family, getting properties set up, fixing things if they need to be fixed. I probably mounted, 80 flat screen TVs over the last 4.5 years. So it's fun. It's tangible, right? I think I get a lot more enjoyment out of that than watching a stock ticker go up and down, right? I have a lot more control over it too. There's a lot of different things you can do with real estate
Correct.
to increase the bottom line, and just different exit points, different paths can go down. I
Sure.
really like that. So it was a little bit of that, and then just knowing that real estate was just a really great asset class, and then it was just a matter of me being tired of renting. My money was going towards somebody else's pockets, wasn't building any equity, and um, I got back, had some money saved up, and well, I did a zero down VA loan, so I didn't even have to come out of pocket, I don't think, for that. But it was a good opportunity, a good time to get in the real estate.
So, you know, but Brandon, this brings up a good point, right? Because so much in today's world is changing because of technology, and real estate is no different. So I remember the times when I had a short term rental. I had a short term rental just outside of Disney, and very similar to what you're saying. Like, yeah, I mean, originally we used it as a vacation home, and then we did short term rentals, so we mixed business with pleasure, like you're saying. But I remember this was before but this is before Airbnb, but this is before any of that stuff. And so like we obviously hired a property management company, but we had to do everything on our own, in the sense like we had to have a property manager that would give the keys to the folks that are arriving. So there's no digital, there wasn't a code to get in and all that stuff. We have to email them, we have to call them and text them, whatever. And so there was no automations. And now we have so many tools that make that whole process completely seamless. So as you're saying, right, like you can manage from afar now. You don't necessarily need, as long as you have good people kind of on the ground that are doing like the cleaning and the turns and stuff, everything else can be done through your computer, through all these tools. And there's so many now new apps that are geared towards short-term rentals, that it's sort of seamless. And so people have to realize that technology is advanced so much that it is making your life easier. So folks that are doing this or have been doing this in the last 5-10 years, that there's new tools out there that are going to make your life a whole lot easier, and you can actually scale much quicker now because because of all these tools. So if you haven't invested in like a digital doorknob, right, or code and cameras outside and things like that, like those are things that you can do a one-time investment and make your life a whole lot easier. So I think folks that are a little apprehensive about getting in, now there's onboarding tools that allow you to really set up a whole SDR business, from soup to nuts in one app,
Yeah.
right? Automated texting, automated emails for check-in, check-out, all that stuff, right? So it's pretty amazing what we can do with technology these days in the world of real estate.
It is. Yeah.
So shifting gears a little bit. So
Go ahead.
Sorry, Brandon. So I wanted to shift gears. So obviously, from a in real estate investing standpoint, understand your story. I do want to get into a little bit of this concept of infinite banking, right? And so on social media, on your website, you are the infinite banking guy and coach. So want to take a little bit of time, just explain to us a little bit about what that concept is and how beneficial it could be for folks, whether they're a real estate investor or not, right? And what that concept means.
Yeah. So what I like to do when I tell people about the benefits of infinite banking, using dividend paying whole life insurance as the vehicle to implement that strategy, is really talk about my history as a real estate investor, right? And I like to focus on real estate, again, because it's my favorite asset class. We didn't talk about the multifamily deals, a little bit at the intro, but just in general. So infinite banking, using dividend paying whole life insurance, it affords people the opportunity to do really two things at one time with their dollar. Okay. So I look back at and this is what really sold me on it, was two things. I could still have the real estate portfolio that I have today, leveraging dividend paying whole life insurance, right? I could have, instead of pulling money out of 401k, I could have had that money sitting in cash value life insurance, right? Instead of dipping into my savings and even emergency funds at one point, I could have taken that money out of my cash value life insurance. Okay. That's point one. The second point is I could have had protection and death benefits for my wife that I now have in place now, but for 10 years prior, I did not have. I have a sizable term life insurance, right? Because again, Money Magazine, Kiplinger's, certified financial planners, they will often say buy term and invest the difference, right? That's the mantra that kind of comes from that community, and that's fine. Term insurance is great. It's absolutely better than nothing, and you absolutely can couple it with cash value life insurance, right? There is a strategy to add the two together to enable you to effectively put more money into your cash value, into your own warehouse of storage for your cash. So those two things, once I realized that I could have purchased all the real estate that we had today using cash value life insurance, okay, and having the death benefit, it was all missed opportunity to me, okay. And I, at the time when I first, I'd heard about it a couple of years ago. Velocity banking was how I was first introduced to it, and I read up on it and got into the forums. And at the time, I actually didn't know anybody that was doing it, not personally, okay. And it came back around to where a fellow short-term rental owner was active in that space, and he was a part of a community of other infinite bankers, and not necessarily practitioners or just practitioners, but people that had whole life policies and were actually practicing infinite banking. Infinite banking in a nutshell, it's how you flow your money and where you flow your money to, and basically recapturing the interest on your purchases, right? Which in my case, in my example, would be real estate, right? But you're capturing the interest and dividends on that instead of losing out on the earnings in your 401k or having to lose out on interest from your savings account, okay? A lot of people don't realize is that mutual insurance companies, when you open up a whole life insurance policy through them and you have sufficient cash value in there, when you take out policy loans, okay, without any questions, without repayment terms, no questions asked, you can get it in as soon as one business day in some cases. I have a couple policies that I can get it within a business day. You're not taking money out of your policy. You are leveraging your cash value, okay? Your cash value is sitting in that policy, and it still earns the contractual interest rate that is a part of your contract. And then you're also getting dividends from the insurance company. Okay. Dividends, non-guaranteed portion, right? And it's licensed agents can't say they're guaranteed, but they have a really darn good track record. Some of these companies, Mass Mutual, Penn Mutual, Lafayette Life, these guys have dividends. They've awarded dividends for 150 plus years in a lot of these cases. And that to me it's a sound business model, right? So if I know that I can put my money, funnel it into a whole life policy, and I can use it for whatever I want, right, on the back end, but on the front end, I get the death benefit for life, and you add riders to it that protect you in your income earning years. That's another thing, right? Everyone's got a retirement plan, but what happens to that retirement plan when your income stops coming in? Term life insurance, you may have riders on there that provide a benefit that cover you, right? But term is just that. It's term. It's temporary, right? So at the end of the day, I really like the utility of cash value whole life insurance, and it's called the and asset. I did some air quotes there for a reason, because it's like real estate. It's much like a home equity line of credit, right? Where you have sufficient equity in your home and you can go ahead and get a line of credit against that. Your home still, has the potential to increase in value, right? Appreciate um, while at the same time, you're able to leverage your line of credit for whatever you need to. Okay. A lot of differences there between that and cash value life insurance. You've got to pay that back. They're usually variable rates. You sell your house, that causes some implications. But it's a common thing. It's a common point of comparison, a common, I guess, product to compare, infinite banking and whole life insurance to. So at the end of the day, it's just being able to have protection, but also cash value that you can utilize for literally anything without question. And you have the flexibility in when you pay it back and how you pay it back. And I just love that.
Brandon, I have a question. I mean, I think I understand it, right? I've been involved or been with folks who are doing what you're saying. But if suppose I was a brand new investor, just got my first job, and I'm a teacher or whatever, right? And I have a stable income that's coming in, and I've purchased a life policy. Give me a practical example of now me getting into real estate, buying my first duplex or something. How does infinite banking, the concept that you just explained to me, how does that impact me, positively, negatively? How does that apply from what you just told us right now?
Yeah. So you say this hypothetical person, they have, a job, and they go ahead and they have, this real estate asset they want to purchase, right? Where do they get that money from for the purchase? That's question A. Typically, it's going to be savings. It could be from a qualified retirement plan, could be a gift, could be any number of places, right? So traditionally, those come from your savings or a retirement account, right? When you pull that money out of that account to purchase this asset, right? In this case, real estate, you immediately stop earning interest on that portion of the money that you pull out. It's done. That is probably the biggest difference, right? Because you pull that money out, stop earning interest, you put that money into a whole life policy. That aspect of it, a number of ways you can do it, right? There's a lot of variables that are involved with that. But if that money that you normally take out of your savings account or wherever, if that was sitting in your whole life insurance policy as cash value, you do the same thing you would do as if it were in your savings account. Okay. Except that you have this death benefit sitting over here. You have these other riders that protect you in the now, right? You just said this hypothetical person has an income, they have a W-2 job, and it provides protection should that job go away. So you got protection benefits, right, that are involved with that. But this cash value has to it tied an interest rate. It's guaranteed. Okay. You want to take a policy loan against that policy. Okay. You go ahead and purchase that asset. So say it's a $250,000 home. You want to put 20% down, pull out $50,000 from your cash value life insurance, right? That $50,000 is still earning interest, right? There's a cost to that access, right? There's a cost to the access to that money, and that's kind of a wash, right? That goes up and down. That depends. But the dividends, when that money is out of your policy, and you use it to purchase that asset, those are still being applied to your cash value life insurance. So over time, that $50,000, unlike if it were in your savings account, high yield savings account earning 4%, 5%, you stop when you pull it out of there. This is not like that. You still will get dividends. Can't guarantee it, but it's highly likely you're going to have dividends applied to your policy. And it adds up over time. That's the thing, right? It's not instant. There's ways to structure policies so that you can certainly speed up the process to gain efficiencies within the policy. But I think that's where it gets its and asset name from, right? You can do both things. And it's really just having your money work for you two places at once.
Right,
That's
right,
what's incredible. Get the
right.
benefits, which I love. You know,
So really, you're borrowing from yourself.
you're borrowing from the insurance company.
Yeah, so you're borrowing it from yourself essentially.
Yeah,
That's right. Which is your money sitting there.
yeah, correct. Right. It's the fact that
Correct. Okay,
you don't
awesome.
have to pull it. Now, there's other nuanced detail, right? That goes along with that. People say, hey, you don't have to pay back that loan. That is a true statement. You don't have to pay it back. It will accrue interest. Okay. But at the end of the day, insurance companies love it because it's a profit center for them, right? So they're going to make money out. They're charging you interest, okay? But at the end of the day, it's less risk to them because they know you're going to die, so they know when they go to pay out your death benefit that all they got to do is subtract that principal plus interest and then give you the money that you were going to get anyway. So for them, it's like it's a surefire way for them to probably make money, right? And square up
Yeah.
on the loan itself, right? They know you're going to die. So that part of the
Yeah,
business model is really
on
neat.
the tail end, they're gonna.
Yeah. So, um,
Yeah.
yeah, does that make
Yeah,
sense?
so
I
I
think
think
a lot of people get hung up on the
this
fact
is
that
this.
like,
Yeah, no, that made complete sense. So I think one of the things that we've been kind of educating our folks on is that exactly what you said, that look, you don't, to get started in real estate, you don't necessarily need to have a huge chunk of change in your savings account, right? You don't necessarily need to use your own money to actually get started in real estate. We actually had another podcaster on that gave us her story where she didn't put any money down. She actually, you have to spend time to get started in various ways, but there's a number of ways to actually get started without using your own actual money in the bank. And so this is another vehicle. I think we've talked about retirement accounts and self-directed IRAs and things like that. So I think again, educating investors that look, you don't necessarily need to save up a lot of money to actually get started in real estate. There's other avenues and vehicles that you can utilize, and this is great, right? To provide another path towards getting started and taking that first step. So I know we, scratch the surface here on the concept of infinite banking, and I'm sure folks are going to kind of Google their way through it. But Brandon, I want to give our listeners an opportunity to reach out to you directly, right? If they want to dive in a little bit deeper as to hey, how do I structure this so that if my goal is to ultimately invest in real estate assets, how do I structure a life policy that allows me to do what I want to do? So how do folks connect with you directly to dive a little bit deeper into this concept and learn a little bit more from you, Brandon?
yeah, sounds good. So I have a website that people can find me on. It's got my contact information on there. It's www.yourownbankwithalps, ALPS. That's a play on my company's name, Abundant Life Products and Strategies. And I got a great team behind me that people that have been in the industry for over 35 years, and they've encountered every scenario. So they're a great help and a great resource. You can also reach out to me at Brandon B at wealthwithalps.com. And I'm an open book. This is a big reason I come on the podcast because, my kids are going to get the benefit of things that I learned, the hardships that I endured, and they're going to be able to experience life in a different way. So to your point about, funding deals and stuff, these guys, they're going to have life insurance policies that will have cash value that they can use. They want to go to school. They want to, purchase real estate. They want to do whatever they feel like is useful for them, right? Ideally, I think I'm going to guide them to income producing assets because I think that is where the real value is at. That will create the snowball effect that I've gotten started for them, but they can carry it on, and that can succeed to generate from generation to generation. So I really like that. But happy to speak with anybody that listens to this, and just reach out. Love to chat with you.
Well, that's great, man. This was excellent. Thank you for taking the time today. You've shared a lot about your own story, right? In your own journey and getting into real estate and real estate investing as a mechanism for wealth creation, but also diving in a little bit about into this concept of infinite banking. And so I really want to thank you for coming on our podcast and sharing that with our listeners. Any final kind of final thoughts, final words of wisdom for people that are either getting started or seasoned investors themselves? Any final words of wisdom from you, Brandon?
Yeah, I got really two things here. This book right here, this is the authority on the infinite banking concept. R. Nelson Nash, Becoming Your Own Banker. Pick up a copy and read it. Easy, really, really easy read. It's an eye opener. The other thing is just get out there and have an open mind when you approach things. I am 42 years old now, and I am just now learning about these incredible benefits of whole life insurance, and you can apply that principle towards anything. We talked a lot about real estate. Right now, we're in high interest rate environments, right? There are deals out there. There's deals that you can get into with no money. There's deals that you can get into just by bringing a skill set, or there's lots of opportunities out there. So just based on the topics that we talked about today, just go out there, soak up, the knowledge that's out there, network, be engaged with people that are experts in the spaces that you want to become knowledgeable in, and things will come your way. Good things will happen. So you just got to get out there and get involved.
Great.
So great.
Hey, thank you guys for
very well
me
taken. That's great.
I appreciate you guys having me on. It's been a really great time here.
Great. No, thank you. Thank you again, man, for sharing your story. Truly thankful for you shedding some light onto that, and wish you all the best. And so for our listeners, thank you for tuning in to this episode of the Spur Your Wealth podcast. And again, we are Budham Singh and Rav Singh from Spur Equity. Remember, your journey to financial freedom begins with both knowledge and action. Where knowledge is power,
but action is superpower. So until next time, happy investing. Thank you for joining us on this episode of Spur Your Wealth podcast. We hope you enjoyed the valuable insights and inspiration. Don't forget to subscribe to our podcast and stay updated on future episodes filled with actionable tips and strategies.
If you want more information about our investment projects, visit us at SpurEquity.com. If you have an inspiring story to share and would like to be a guest on our podcast, email us at podcast@SpurEquity.com. Until next time, happy investing.